So, we are talking about approaching the market like a pro. So, actually, I'm not. Don't let me try to say that I'm a pro yet, but I'm in a process to be a professional in trading because uh, to know a pro, the first thing is the lifestyle, the way he makes money, and the amount of lot size the person uses. So that's what we use to know how a professional. A professional must be someone that is already making it back to back perfectly, and but I'm still building up my own professional aspect in trading. So firstly, in forex trading, what why do we trade? Just to make money. That's the main reason why I trade. To be financially stable, to see something and afford to get it. So there is one belief for me in trading. What is that belief? The belief is that every highs and lows in the market, they are all liquidity. Every swing high, swing low, swing high, swing low, swing high, swing low, they are all liquidities. Even if it is internal swing high, internal swing low, all these internal structures, all the highs make in the market is all liquidity. That's my own belief in market. So that's what gives me approach in making my bias or in taking my trades. So let me just quickly show you guys on how I do my top down analysis from actually if we are going into a new month, maybe from September to October, my first thing to do is I go to monthly time frame. So let me just check monthly time frame to know what's going on in monthly market. And while looking at the monthly time frame as a intraday trader, I'm not a swing trader. I trade. I'm an intraday trader. So in few hours, I hit TP in the market, and because I don't target the swing I target the recent price action highs and lows. So you get so actually in this multi time frame now, I don't look too much in zooming in to know what's going on. Actually, we are interested in what is going on there at the swing trader, but for me, I'm just interested in the current highs and low in this monthly market. So what are the highs that I'm seeing here? I have this high, I have this low, which I can I see again? I have this low and I have this current high that market is trying to make. So now, if I zoom in very well, if I zoom in now like this to know, look at what is going on, you can see that market is actually moving, forming higher highs and higher lows. So you're having something like this. So market is coming downward. So that's what we are seeing. But my own aim is just to look at where money is, where is the highs, where is the low. Because I know that before market can reject, market can needs to take out the high or low. After looking at the major highs and lows, there is one more thing I need to look at. So in the leg that is pushing up, like this leg here that is pushing up, why is it going up? The reason why this place is going up, why is it pushing? The market is moving up. The reason is because market growth structure here. And when market growth structure, you are expecting market to pull back to a liquidity point, either internal or external. Shey you get. So now, in when market is going up now, in this leg that broke this structure, we have candles make here. So, and these candles, each of the candles are monthly candles. I hope you guys understand. Each candle is monthly. So my own belief, as that I've said earlier, is that all highs and lows in the market, they are all liquidity. So every internal highs that is being made in the market, they are also liquidities for us to target. And liquidities are, it's just the same thing as inducement, but in liquidities I see it as somewhere I can target, then also for somewhere to look for reversal or for continuations. That's how I see liquidity as, is a place, is a point where I look for reversals or look for continuations. So now, this monthly time frame, okay, I've seen that market is pulling back. We are seeing a pullback. So any break of structure, we need to see a reversal. But before we can reverse also, there must be somewhere the market seek before we can reverse in the market in a trend. So in this leg here now that we come in, I hope I'm not too fast. In this leg here now, all the liquidities here, we need to identify them. So let me just zoom it very well. So all these eyes here that is being made here, they are all liquidity for us. These monthly eyes, they are all liquidity. I know so many of us have so many theories on how you look at your liquidity and the like. So like now, all these ones, market has cleared them. They have been cleared. And the last one here that I see as internal liquidity. Okay, this is not the last one. We still have four more above here before the major swing high. So, but market has seek this one here, this one here. That's the liquidity that we seek now. So, after seeking that liquidity, we are expecting market to give us a reversal or to give us a continuation so that we can target the next liquidity. And this liquidity is nearest to the swing high. We can actually, market can even use that place to sell or come for the major swing high, then give us a confirmation to sell or to continue our buy. Because after securing liquidity, you just have to be patient enough. Look at what market is trying to do. Is it a strong rejection so we can look for reversal, or a weak rejection to look for continuation? So now, after seeking this liquidity now, I've seen what happened in monthly that market came here to seek liquidity. The next thing is to go to daily time frame, weekly time frame rather, weekly time frame. Assuming, okay, like this week now we are closed. Tomorrow or Sunday, I'll be on my chart on weekly uh time frame to look at what next next week we'll be doing, my anticipation for markets. So um what's my view now on weekly time frame? Monthly time frame has already told me that we are coming from a liquidity point here. And this swing here, this market price action that happened there, you can see we have highs and lows in that trend, and we just broke a structure here. We've broken structure here. What's the next thing for us to do? After taking an internal liquidity, we can't just be selling like put adding more position to sell without confirmation. So that's why I don't really like swing trading like that. And I'm not that I don't like it. I'm not that patient enough to be waiting for taking profit. So I will just identify all the liquidities in this weekly leg. So and this is the low we have, all these lows, because some people will be looking at some places that they are protected, they are somehow. There is no, even when the price is protected, maybe it takes out liquidity. Since market has taken another external or a liquidity, there is high chances, like there is another chance that market will actually come, maybe assuming this place. Okay, let me draw something like this. Assuming we have a protected point like this, and market has used it, and we've used it to clear a liquidity here. When market is coming again, and we are still expecting market to buy, market can actually take this place to buy, but it doesn't mean that it is because this place is protected, that's why market bought from here. Market can actually use this place to buy, to hit TP, then come back again, instead of you still waiting for market to respect this place, and it's going to take out your protected point, then give you another confirmation if market still wants to buy. So you get. So now on this weekly time frame, I've seen that okay, market has taken out a liquidity in monthly time frame. You can see that the liquidity is from higher time frame, monthly. So there is high probability that in lower time frame, market can come for an external liquidity. So what is external liquidity? The liquidity that are outside, like this, all these ones here, outside, these and outside, they are outside external liquidities. So you get. So and the liquidity that is coming, that is selling now, where market is selling from, is from monthly time frame liquidity. So we can expect market to come to one of these lows. I'll be expecting market to come to this low, give me a confirmation to buy, or give me a confirmation to sell. I don't know, maybe it's going to buy or sell, but I'll wait for the confirmation, take on what market wants to do. We can just only predict what market will do. We don't know what it's going to do. But due to break of structure that we have here, we can anticipate, okay, market can come to 50% of this weekly leg. So and the 50%, let me just from this do this high. Okay, you can see maybe the 50% is here. So maybe you can, okay, give us confirmation to buy to one external point in this leg, then we sell. Target the next liquidity to our 50%, then give us confirmation to buy to another external, or then anything. Market can do anything. We just have to focus on what market is doing. That's how I look at my own market when it's doing its things. So this weekly time frame now, I've identified my external point in this weekly leg. The next thing for me is to go to daily. Okay, so on my daily price action now, I will need to zoom in to focus on the things that I will be interested in. So the liquidities I have been able to see now is this monthly liquidity that market just take. Then this weekly leg is a liquidity for us, so you get, and this current price sell price action, so you get, and this also, and this current price action that took out our monthly liquidity. So the leg that take out this liquidity, I'm expecting market to clear it, or it can also mitigate it, then start pushing up. But due to the break of structure that we had there, I'm expecting market to go more lower. So you get, I'm expecting. I didn't say market will go lower. I'm expecting. So it's still anticipation. So this place we can mitigate it. Give us a push there. Market give us a confirmation to break it. But due to it's the one that takes out liquidity, I'm expecting market to clear it. So you understand? And because some people might be saying, okay, because it is protected, it takes out this place, and that it is protected and break structure. But this leg, what's the function? It went to take out a monthly liquidity. So market can actually come there, mitigate it first, give us reaction, go to a liquidity point, then sell. So you get, that's what I'm expecting. But I'm not expecting it to hold for long due to what the current price action is saying. So now in this daily time frame, what should I identify? I need to identify the liquidity because my trade entries, they are still in lower time frames. So you get, so this is the current high where market is coming from. Let me just clear this monthly line. I've already have it on my notes here that okay, market is coming from weekly um liquidity. So now I need to identify the liquidity I can spot in this leg here. So we have this external point one, this first pullback, this is a low, this another low, this is another low, this is another low here, and we have that high that take out our monthly liquidity. Then now, okay, we've cleared. Let me still hold on. Let me just do it like this. Yes, yes, because market has cleared all this liquidity. I'll just show us some entries, the entry models, how I entered market to those places. Because I think when price was reacting from here, I got too many entries and the price action was good. Those weeks was back to back profit for me. But this week was just really somehow. I was missing entries this week, missing entries, hitting myself back to back. In days no profits. So that's how this week was. So these are the lows from this buy. So now you need to identify the current liquidity that market is creating now. So from this now we have this external points. We have this external points. Okay, let me go to 4 hours because you can't see the major, like before, because this price action they just started and I need to break all these price action down for us. Let me go to 4 hours time frame. Okay. So as as I told you earlier, that every highs and low in the market, they are all liquidity. So now let's put out some things that market has done so that you can know that even if some places are protected, once the protected point has done what it needs to do, maybe it has target under liquidity, that place can literally fail because of where the current price is coming from. So you get, so like this current sale is coming from monthly time frame liquidity. So our lower time frame will be very weak to hold it. The price action coming from it. So you get. So now we have this high, we have this low, we have this high, we have this low, we have this high, we have this low, high, low. You can see that this is a liquidity gap, a low, and this is a internal structure liquidity. The market came, then we sell. But I need to show you guys on my entry. My entry models is just like something simple. Let me just show you how I enter trade. It's just something you guys know already. Karma has taught us everything. After identifying your liquidity points and after identifying your trend, your current trend, maybe a sell. So if you are selling and you know that okay, market has taken out a liquidity and you are looking forward to sell from that liquidity and you know that it is assured that it will sell, you wait for confirmation for market to spike there, grab your liquidity. Then the next thing for me I do look for is a lower time frame confirmation to enter my sell. And I know that market can give me a first push down, another push up, then breaks below. Once I can see this, I won't focus on what market has been doing here. I won't focus on what market has done before grabbing the liquidity. My focus is on the liquidity and the current price action. So once market clear my liquidity and gives me this, the next thing for me is to bring out my the POI that market breaks out from here. The first thing I'll be looking for is maybe a liquidity to the place or a breaker retest, a retest from the breaker. So once I will just put my entry here, then stop loss here. I'll first trade the breaker. Okay, I enter the breaker, take my partial profit from here. Then I'll be waiting, anticipating for market to come back to take out this mitigation of breaker. Not coming to my POI exactly, but coming to my mitigation of breaker to give me another confirmation to sell. I hope you guys are getting it. So are you guys hearing me like this?
Yes, they hear you, boss.
Yeah, we dey hear you, dey hear you.
Okay, you are getting what I'm trying to preach to you guys. Hello, are you getting me? Are you getting me?
Yes, yes,
Yes,
yes.
yes, we are getting you.
All right. Okay, so now let me just go to now in this place, assuming we haven't gotten all these price actions here, all these price actions here. So let me just analyze what happened here, even though I have so many losses during this time here, but I had profits in this place here because I was seeing clear price and direction. But here, to be honest, I was looking for market to clear this high before I can sell. But I didn't know that the market is going to use this liquidity here to sell. So I was still looking forward to buy and I keep chopping stop loss, stop loss. So that's what happened. my trading during this time here. So let me go to 15 minutes time frame. So I'm not yet just to cajole you guys that okay, I'm very profitable. Me too, I do chop loss, but it's just that due to risk management, I make money with my risk management. So I think let me go 5 minutes. If because I'm not using all this premium trading. Let me say maybe okay. So it's amazing. So what's the year? I hope you guys remember this IE is coming from this IE is coming from a liquidity in monthly time frame. So when I add this I when I knew when market grab this liquidity, so I was expecting market to sell. But in 3 minutes, I think if I go to 3 minutes, I won't be able to see price action of these places. So that's why I want to use 5 minutes. I actually like 5 minutes, 3 minutes, 1 minute for my entries. And it depends on the time frame that give me a perfect clear candle. Like the candle is very accurate. It's giving me some engulfing and some nice candle that I can trade from and that can give me a good risk reward pips. There you get. So now what I need to look now after grabbing liquidity, I need to identify a high. The next thing is to identify a low. The next thing is identify a high, then a break of structure. Once this has been done, that's when I start looking for my entries. But yeah, I think got an entry here, but it's on 1 minute or 3 minutes time frame. But I can't do that because of I'm not using premium trading view. So, but for these 5 minutes, my price, my um strategy still comes in. So after I identify this high, this low, this high, and the break of structure. So the next thing for me is to look at the candle. I can actually use this candle because yeah, I'm using this bullish candle here. This one here. This bullish candle. So I don't really like using all this line to identify the breaker. I just sometimes see it as a support and resistance instead of seeing it as a breaker. So I use it as a support and resistance because sometimes from my own trading experience, all this breaker works more. Like if I in some places this breaker that I drew out like this, it can work so many numerous times. Like okay, after tapping into it, okay, market can come back, give me another confirmation inside that breaker box. Then I will enter again, sell the next target. Market will still come back, maybe um give me an incomplete pullback then into that breaker. Then I will still use it for another confirmation, then sell again. So you get that's how I do view market with breakers. That's why once I see a breaker mitigation, even when I'm not in the price, okay, maybe market came to you. I don't know when all this happened, but I now spotted this breaker like this. Okay, breaker mitigation. I will just draw this line out, then wait for my market to come, give me confirmation like this. Then I will enter from this breaker, wait another one, enter another one, then target. That's how sometimes can just take my breaker and go to my TP. Then after break structure, I'll wait for market to come for this. This that's how I do see market. So now, um, I think this time when market break structure and mitigate, I can't remember maybe I take it, but from from this view now, I can actually take trade because market actually give me a confirmation after entering this breaker. Even though sometimes breaker doesn't give us confirmation to sell, just tapping themselves. But this one gives confirmation. How after going in, I can identify a high to a low, another high to a low. Then this breaker mitigation, then this another confirmation. I'll just enter my trade here, stop loss above here. Let me just because I need to see it very well. I must see it very well. That's why if I want to enter my trade, I'll just draw what I need to see like this. Okay, let me draw it. This is how I used to draw it. I'll draw a liquidity. Okay, liquidity one, two, breaker. Then I will now wait for market to print. Once I see it like this, I will have entered, put my entry stop loss. This is the low that makes market broke. Then um the POI available above is this. Stop loss is this, this still cool. Then I'll target here or the next liquidity I know that okay is available. You can just because every eyes I don't even look maybe it's protected or not. But I know that the current price action is coming from higher time frame. So even though this place here looks protected, it looks protected. So it's some people will be looking for buy here, it's still protected. But me, as for me, I will target the low that okay, market will clear it because of the current price I'm expecting. I'm seeing rather, I just target it, then TP. So after clearing it TP, then I will wait for market to come to clear this my eye here. The mitigation, the origin of the mitigation for the breaker. That's where I will set my alert. Okay, once market reach there, should alert me so that I can be on chart. Then I will spot a POI that is nice for the place. But I don't really like using POI. Sometimes market won't reach my POI. So I will just wait for confirmation. Okay, this one market reach the POI. But as for me, I will just wait. I will wait perfectly for my pattern. So once it doesn't show, I won't enter trade. But as for this one, it mitigate my POI, but I can still look for more confirmation, maybe 1 hour, 3 minutes. 3 minutes can still give me more confirmation or 1 minute. But for this 5 minutes, I think I have this high, this major low, this high, then we have a break. So this break here, I can use this breaker as my entry and my stop loss above. Let me just push this and that bearish candle. Then after breaking below, I'll be setting my entry point here. I just here about 10 or 9.5. But as for me, sometimes due to my broker, I use Xnet. They do the spread is like 10 pips. So if I have 9 pips now, I could just add more 10 pips to it. So that I can cover my spread. Then and I know that the origin of my breaker, I'm going to go to the target where it's coming from. After clearing the origin, then I'm going to go back to my current price. That's where I will take my major profit. I can now hold some small profit. So, but on my higher time frame, what I'm expecting market to come for this first liquidity. This liquidity, this is where I'm expecting market to grab the first liquidity. So, the trades I'll be looking for is buys. I mean sales rather, sales. So now this place now, okay, you have a break of structure. I can go to 15 minutes. 15 minutes can give me I don't want to be stressing this thing to my. Let me just use line or something like this. Okay. Like after breaking this structure, I will see this place as this zone here as my support and resistance zone. The market can mitigate and break. So it will be like my breaker. So you get it will be like a breaker for me. Then I can use that place to look for confirmation to first sell. Because sometimes breakers won't respect. It will be like it will be your maybe go back up before you can trade. But my next place to look for liquidity is this mitigation where I entered here. Market can actually come back there to give me another confirmation. That mitigation, that week, that's where I'll be looking for confirmation with the same pattern to sell. So, but as for this place now, what is happening is that I need to look for confirmation from this breaker since I'm seeing rejection. So how can I identify uh my sell from this zone? And this sell, when I enter it, if I enter the sell, I have to target this place, not the daily or 4 hours liquidity. This current price action is this intraday trading, not swing trading or um whatever trading. So now where is my major eye? This place. I have this eye now. Here you get. I have this low. Like if I'm on chart, that's what I will first see. Okay, this eye, this low. I'll need to identify another new eye. Okay, this eye. A new low. This low. Okay. I'm waiting for breaker mitigation, but doesn't do well. Just go inside then another break. So we're having numerous break. It's not giving me a clear price action. So low, high, low, high. So it's not clear enough. Then we have this high, we have this low, this high. Okay, this low. Okay, I can now be looking for markets to come to this high then sell. But I don't think I can enter any trade from here. It's not looking nice for me to enter trade. But if I'm on chart, there's no way there's logical way approach. Sometimes it won't be clear. It won't be clear enough, but your logical trading, like your experience or because I do use other I will still talk about confluences also. So you get I do use other confluences to enter trades. Maybe okay. Now the liquidity that market graph that I identify here. can see that market was touching that liquidity. Market was touching this line. So I can use that as confluence for me to sell because confluences too also works or using all these psychological numbers or that psychological levels. Like now, this line now is giving me is on 1.7 1.17903 but 03. I can just use a psychological number of 900 for my entry, then use my stop loss maybe above the previous highs. So you get that's what I can just use there. When market is just giving me random a noisy price action. So I'll just wait for market, enter a trade from, let's say, okay, 900, then my stop loss above this or 5 pips above minimum. So once I enter like that, I know that this is my target for the sell. Or I can just target somewhere this place for first TP and second TP. Because sometimes due to my experience also, I can see market coming from this breaker, then just clear more internal liquidity, then go to the major POI, then give me a confirmation to sell and I target here. The market come back, this my entry here, then give me another confirmation, then sell. So it's just something that has been working for me so far. If you are in your right direction, so you get if you are in your right direction, the market will surely give you what you need. So now after this price action here, okay, we've done this. The next thing I'll be waiting for, market will be doing its thing. The next thing for me, I'll be expecting, waiting, okay, what has happened? Okay, this breaker, what's happening to this? This breaker mitigation. Then the next thing for me, let me remove this line. The next thing for me is to bring out the eye of that breaker mitigation. Why are we using all this breaker mitigation? Because we know our buyers that okay, we are selling. So the next thing, okay, after clearing this degree, what should I wait for? Wait for a confirmation. Then I also have uh a place to sell from here. This eye here. Then we can also pull out this here. So you get. So you can just pull out something or look at, because I love checking my previous prices, what has happened, like things that are happening here. Okay, breaker mitigation. Every break of structure like this, if there is no mitigation, let me show it very well. I break of structure, breaker mitigation. So I do expect market to come for this breaker mitigation, then give me condition to sell. This one too came to the breaker mitigation. You can see now here we have two mitigation from that breaker. We have this first one, we have this first one, this second one. So you get, so now you can just see okay, break of structure, then this one mitigates the breaker here. The market can actually come to this breaker mitigation here. I hope you guys are seeing what I'm doing. Let me just identify it out here. Okay, uh, yeah, because we have something like break of structure here in this price action. So this is a breaker mitigation then sell. So I'll be expecting market to come to this breaker mitigation. Then let's see where market is reacting from now. The market actually didn't reach there, but what we'll be waiting for, okay, mitigate the uh the POI that meets that breaker, this place, just mitigate that place. But I don't really like entry trade from there. I expect market to I always like market to clear that breaker then sell. That's what I do like to anticipate. But now, okay, we've taken out this price action. Then what we are looking for is sell. We are still looking for sales. But in our sales, we can still see buys. If sometimes the market is just somehow, we can look for buys. Like maybe, okay, market hasn't reached my target. Let me look at something I can do here. Come, okay. After this break of structure here, I expect market to come to this breakout, but another breakout will be here also. Market can just mitigate and start selling also, because all those breakouts are always useful for market to mitigate and keep selling, keep selling. You can see in some normal price action, like in some price action that you can see that is happening, you can just see market moving like this: break, mitigate, break, mitigate, break, mitigate. Then after some while, there will be a come for this, all this, then give us a major sell. Shey you get? So we can see that too on some reversals. So now we have a low to a high. I think this one was broken. So now we have another new low. This is the low. This is the major low. This is the high. So I'll be expect market to mitigate the breaker. I will enter from the breaker. I'll just wait for market to do its thing. I'm interested in the breaker point. This is the low to a high. This is our low to this high after this break of structure. Then I will enter my trade from this breaker. Then wait for I will secure some profit. Then if market likes, I will enter due to this reversal. It's not major trend, it is reversal trade. So we are counter trading. So after this break of structure, we have this mitigation. I'll enter from here. I can't remember, maybe I took this trade, but I think I take some counter trade like this. After this break, I will enter here. Then I will put my pending order also here so I can wait to take out my breaker point. So that's where I'm expecting market to target. This is where I'm expecting market to target. But on my current price action, I will also be looking at all the majors highs, because every highs and low in the market, there are always liquidity that market will seek. You can see that when market cleared this one, there was a pullback. When the market cleared this one too, there was a pullback. So there is no place that okay is protected, market cannot take it. It is only protected in the current price action. If in this current price action, okay, in the current price action, like this, let me draw a diagram. If market is going this way, you have a break of structure. These are liquidity. So this place is protected. But if market come now, it will respect it and keep going. But after doing everything that it needs to do and take a liquidity,